David R. Guttery is the president of Keystone Financial Group in Trussville, Alabama. David Guttery and Brandon Guttery are financial advisors and represent Emeritus Investment Company, LLC. Please stay tuned through the end of the video for additional important disclosure information.
Hello, I'm David Guttery, president of Keystone Financial Group in Trussville, Alabama. Within our previous videos, we discussed at length the potential implications of unknown election concerns on the economy and, by extension, on consumerism and the behavior of consumers in a Biden administration era. Within those videos, I discussed the potential for the market's reaction as uncertainties became known. About 1 month ago, I encouraged everyone to remain invested and true to their long-term objectives while being defensively hedged during this period of time. Today, many of those previously unresolved election-related concerns are now known factors. Fortunately, we haven't experienced another volatile period of melting algorithms similar to what we experienced in February and into March of last year as they were related to COVID-19 concerns. However, we are beginning to see what is, in my opinion, a sector rotation away from pure growth, high beta assets and into what have historically been more conservative, defensive, lower beta, and dividend-generating holdings. In just the first few weeks of the year, I've observed quite a few pure growth, high beta stocks that performed well last year that have lost 20% or more in value so far this year. Conversely, we've seen quite a few stocks in sectors that didn't contribute much to the rally from March of last year that are performing strongly just 3 weeks into the new year. Since Christmas Eve, we have observed a noticeable rise in the yield of the 10-year Treasury bond. And we have also observed a very demonstrable rise in the price of oil. Furthermore, asset classes that lagged the rally from last year are now leading the market sectors in just the first few weeks of the year. I believe this is the market looking ahead and beginning to make the adjustments that we've discussed in the past as it considers the factors that will likely have an impact on the economy going forward. At a very high level, I've offered the following analogy to my clients. The shorts and the t-shirts that you were wearing in July are just not the best articles of clothing for the weather in January. Seasons change. Economic seasons change. Today, it makes sense for the jackets and the jeans. Following that analogy, we are encouraging clients to adjust portfolio holdings to reflect the season into which I believe we are changing. I do not believe that we will observe an attempt to undertake massive tax reform in this year, but that is very likely in the following year. Therefore, this sector rotation could give us an extended opportunity for the reallocation of portfolios when suitable. Within last month's video, I strongly suggested that this is not the time for a portfolio to be left on autopilot. This is the time for proactive management and an eye toward the future. The question should be, where are we going and why? Today, I would strongly encourage everyone watching this video to be more concerned about that question rather than being complacent with where we've been. As I've discussed previously, I believe that we are entering into a new season that will be characterized by slower velocity of money, higher Treasury yields, higher inflation, weaker dollars, and a change in consumer sentiment away from discretionary spending in favor of a more cautionary focus on consumer staples spending. Corporations will be more cognizant of the higher tax environment within which they must operate. All of these factors will have an impact on the economy and, by extension, the market as well. At a very high level, I believe that some of the traditional, slower growth, dividend-paying sectors will likely show strength over the coming years. Under the economic and fiscal spending initiatives of the Biden administration, and given the potential for changes in future tax policy, I believe that some emerging and non-traditional sectors of the market could also perform well. However, I would caution against simply adopting a basket of utilities, for example, at the surface level. you must dig more deeply and eliminate certain candidates that may be positively correlated to fossil fuels, for example. Likewise, I would advise against adopting a broad basket of pharmaceutical stocks, but would prefer to hold those that are diversified in product line and with a wide moat. I could certainly continue along these lines, but for the purposes of this video, I would suggest that you work with a financial planning professional. And if you do, engage that person frequently at this time. Determine where your strengths lie and identify where weaknesses may exist as a function of where we are now and where we are potentially going as it pertains to the changes that will likely come with the new administration. Do this with an eye on the long-term financial plan that should be guiding you toward the objective of your stated investment goals. In closing, in last month's video, I suggested that there is usually always something to hold in your portfolio. However, there is an art to knowing when to hold certain things and why. You must always be aware of how the economic seasons are changing so that you can recognize the opportunities for portfolio adjustment. Complacency is not an option. If you would like to have a more in-depth conversation about how we are engaging with our clients during this time, we would welcome the opportunity to be of service. Thank you for joining me.
David Guttery and Brandon Guttery independently offer securities and investment advisory services through Emeritus Investment Company, LLC, member FINRA, SIPC, and Emeritus Advisory Services. Information provided in today's segment is gathered from sources believed to be reliable. However, its accuracy cannot be guaranteed and should not be interpreted as tax or legal advice. Any performance stated is past performance and is not indicative of future results.